Welcome to today's episode of the Insurance, Life, and Everything in Between podcast. My name is Adam Brsan.
And I'm Chris Smith.
If you've yet to do so, hit that subscribe button so you never miss another episode. And if you love this podcast, don't forget to share it with a friend or colleague. We greatly appreciate your help and support. Securing your future. Again, we're just kind of thinking a lot about kind of like what happened with you this week, Chris, with the agent and that. And I figured, she said you never taught her anything. So I figured, maybe if she's on, we could teach her how to, master her business growth and prevent chargebacks and build those renewals. So.
Oops. Did you put a shirt on me? Is that that? I don't own that shirt.
I did. Yeah. I AI'd a different shirt on you.
If you're watching right now and you like my AI shirt, comment below if Adam should pick out more clothes for pictures.
I figured I don't have that many pictures of Chris. I got to put something else on him instead of just the same sport coat. So I figured I'd AI it and see what happened. This was the best option. There were some that were pretty crazy. So, but anyways, securing your future. Just a few little tips. Before we get into like talking about persistency, we talk about renewals. I recommend be sure to read your contracts with the different carriers that are out there. Every carrier, they're all, they should all be the same, but they're all a little bit different. And you got to read some of the fine lines. And I think sometimes that's what happens is people just assume that every company is the same. And regardless, you're just vested the first day. And regardless, that money's always going to be yours and you're always going to have renewals. So I think it's important when you do your contracting with the different carriers, make sure to read your contracts and make sure that you're not missing anything.
No, Adam, I put myself in a recruiting funnel this week just so I could see what it was like from the other side. Like if you're an agent and you haven't put yourself in a sales situation and witnessed it as a consumer, you're missing the boat. I apologize to whoever I paid for my lead, but I put myself in the other side of the conversation. And that person was offering a contract or an opportunity that wasn't vested for 2 years. Now, if that's a decision that you make to run your business, that's your decision to make, but you should read your contract to know that this is a non-vested opportunity so that you're not surprised in a year when you leave and you get nothing. So I thought that was pretty interesting.
Yeah. That's the thing. I think there's companies, and again, you still got to read the contracts. I've seen agencies out there that say we vest our agents from the very first day, but then there's still a 2-year vesting period in the schedule. So you just got to be careful. You got to read your contracts and make sure. But yeah, and heck, if you're going all in with a company and you look at that as your future, I wouldn't worry about a 2-year vesting if you plan on being there. But at least if going into that's how it is. I've worked for organizations that had 2-year vesting. I didn't mind it because it maybe pushed those agents to stick around. Like they might have given up, but then they're like, man, I don't want to give up because I don't want to lose those renewals. Yeah. And they would stick around. And heck, I still get renewals from, carrier I was with 11 and a half years. Same thing. I probably wasn't vested for the first couple of years. I was only 20 or 21 when I started. I didn't even really ever think about any of that stuff back then. I kind of went into this business knowing this was going to be my career. And I never thought about this, I never thought about this not working out or having to do something else. So I never really worried about the whole vesting window in that. But with that said, let's say you're the carrier, your main carrier of focus. If they're constantly changing things, if they're constantly updating agent agreements and wanting you to like re-sign new agent agreements every year, or they don't let you get into their website unless you like approve new agent agreements, I would say, beware. I almost feel like maybe those are carriers that just haven't quite figured it out yet. But they're changing things. And even in these different agent agreements that you're signing on, there's a reason that they're sending you a new agent agreement, and there's got to be something in there that they're changing, or they would not be be sending it to you to sign. So definitely don't just, even if it, even if you're not allowed to get into a carrier's website until you agree to the new agreement, read it. Maybe you're not going to want to go back into that website after you read the agent agreement. But like I said, there's companies that do that where I've seen it where, they don't allow you into the website until you agree to their new rules. Well, read over those rules. You don't want to agree to something that could end up costing you down the road.
Adam, real quick, an average cost to hire a lawyer to do base level work without a retainer, like the hourly rate for lawyers, probably $350 to $400, unless you're talking New York City, Philadelphia, and such. I would much rather spend $350 or $400 for an hour of labor with a lawyer to have them read a contract and give me their opinion of it, instead of risking tens of thousands of dollars if you're not sure about something, or you're making a commitment with a vesting. Or don't be afraid to spend a little bit with somebody like that, I think, if you have a concern that the contract might not be in your favor.
Yeah, like I said, if you see, like I said, agent agreements, like how often does a company or carrier have to change things? To me, it's just a red flag, and that's where you need to beware if you're experiencing that sort of things. I would also recommend if you're a new agent, you hear so much about the high comp, and you just got to get the highest comp out there. I would say don't just focus on high first year comp. I would say a lower first year comp with higher renewals will make you more money long term. So, I remember I had a carrier contract. The first year was still pretty decent. I think it was like a 120, and it paid like a 13% renewal. Mm-hmm. And that was an awesome contract that I never really wanted to give up because, where else do you get those high renewals? They're hard to come by. And, people will say what they want about final expense business and the business not staying on the books and that, but enough of it's going to stay out in the books that you can build a pretty good renewal base, especially if you have a decent renewal percentage. But if you are sacrificing your high renewal percentages to make that first year high upfront money, well, in the long run, like I said, you would make a lot more by maybe lowering that first year comp to get the higher renewals in the future. So, don't just and same thing when you're reading over your contracts and you're looking at the numbers, take a look at that. Look at the first year, look at the renewals. If you're getting a 1% renewal, years 1 through 5, and then nothing after that. Who cares what the first year comp is?
Yeah, it's insulting. Yeah. Like Nick Frumpkin, we did a video a few weeks ago. It's like, if it was really that low or it wasn't there at all, then there would be no business motivation to service the policy. Like there's no reason to do it at that point. And when a carrier needs that business to be profitable, but you're not paying us to do our job anymore, it doesn't make a lot of sense. So I agree, a balance of your core product being comfortable in first year and solid in renewals does make a big difference.
But yeah, definitely beware. There's contracts out there that even some of them, it's just right on the commission schedule that they'll have agents sign that if you don't read the fine print, there's one where if your lifetime persistency falls below 65%, they take your renewals away. What kind of person has the ability to keep over 65% of their final expense business on the books long term?
Yeah, Ray Berrigan
I almost feel like they're setting people up to take the renewals away. It's impossible to have a lifetime renewal. Lifetime persistency over 65% in final expense, in my opinion.
Yeah, Ray Berrigan said when he interviewed Adam Hale recently, or they interviewed each other or whatever, that like 40 and 50% stick rate into years 5, 7, 10 and such is the reality in many cases. And they have a customer service department that services their business, which is awesome for those that choose to work there. But like, if that's the long-term renewal, which I probably would agree with, then if 65 is where they cut it off and 50 is where it probably lands, they're purposely trying to cut it off. It's almost immoral.
I think it should be illegal. And that's where I don't know. I feel like, again, I wish that it maybe was a little bit more standardized across the board with carriers when it comes to paying out the renewals and that, because I think most agents just kind of feel like going in, that's just, you're always going to have renewals because that's just how it is. Like I said, I mean, heck, the one carrier, 11 and a half years, they're still paying renewals out to me. I mean, they've dwindled down quite a bit. But I mean, I got a deposit yesterday from them. So, I'm still getting money from them. And I left there, what, 8 years ago?
Hmm.
No, 9 years ago. So, left there 9 years ago and I'm still getting paid renewals from them. So
Yeah,
I
we
still
have
have
to
business on the books. It all hasn't fallen off over, over the last 9 years.
we have to be, as agents and agencies and agency owners and real people, place our business with companies that deserve and want our business. I had a conversation with Justin Brock, and he's talking about, being leveraging carriers in the Medicare space that want to work and collaborate with agents, not ones that want to work against. I'm paraphrasing, I'm not quoting there. But that means a lot. Like if an agency can partner with a carrier and the carrier is dedicated to the growth of everybody involved, that's a good thing. But don't place your business with someone who doesn't give a flying hoot about you.
Yeah. Or, where they don't want you to, they won't provide you with a list of your policyholders.
That's
Like
suspicious.
you're the one who wrote the business. Like it's like they're playing prevent defense. They're looking to not lose rather than looking to win. And
Mm.
they're so worried about people going out there and replacing their own business. Chris, do you think if someone is like a professional business flipper, like that, they're going to need to call into a carrier to get a list of their policyholders?
Well,
Like, I'm
first,
pretty
an
sure if you're
agent,
looking to churn your business, you're going to already, keep all that information.
yeah, you should keep your own information anyway, first off.
Mm-hmm.
And if the carrier doesn't have an easy process to keep your information, that's a problem. And if they don't, and you still love them, you should still keep the information. One of my VA records every application I write and puts it in my CRM for me. It's not that hard to do. You use renewal and residual income to pay your salary. But yeah, I mean, like bad people are going to find a way to do bad things. But what you're doing is you're preventing good people from going back and seeing their clients and writing more business because you won't let them see their own business.
Well,
Like,
Chris, it's like the one agent 40 years ago that screwed them out of $20,000 is the reason why everybody else is punished for it. You know, is the problem. They focus on that one bad apple rather than focus on doing more to help those that are doing the right thing.
yeah.
That are just looking to do what I've done over the last few weeks and written a lot of business on existing policyholders.
Mm-hmm.
Not replaced any. I don't go in and try to replace my own business. All I've done is add coverage.
Yeah.
And I could have added it with carriers that if they were still paying me renewals, maybe could have put it there. But why do that?
And here's the other thing. When a carrier makes it more transparent what the book of business is, it makes it easier for mid-level agency owners to survey a book of business to protect the carrier from freaking fraud. Like if it takes me a long time to figure out if she is rewriting her sister through multiple carriers, then I might not be able to discover it. But if I can look in the portal and look in the portal and look in the portal and see that same name over and over and over again, because the carrier is making it transparent, it's easier for us to protect them as well. And if we're not protecting each other, then that's not going to benefit the business either.
Yeah, most definitely. I mean, that was one thing I felt like for a long time, I had to play detective when it came to working with a lot of agents. And it's sad to say that that's kind of part of the business, but sometimes you do. You got to look, like I say, you look out for your people, but you also have to protect yourself.
Mm-hmm.
And a lot of that, I used to catch people all the time doing stuff that they weren't supposed to be doing. But I did have access to a lot of stuff that just the regular agent's not going to have. That I wish that, yeah, if you have a downline, I wish that you would have access to more information. I wish maybe more carriers would be willing to share that information with their uplines to be able to protect not only the upline, but the company.
Mm-hmm.
So let's talk about persistency. Like I said, because this is the biggest part of it, keeping your business on the books. You got to have that mindset that writing an application and earning a commission is just step one. That's it. your clients are your clients for life. So, and again, I mean, I've gone back and written a lot of business on existing policyholders. I don't think they would take out a life insurance policy with anybody but me. But that's because I've made myself out to be their guy. I'm their insurance man. They don't call other people when they need a additional policy. And show your clients that you care and that you will, and they'll stick with you. One example, you could put 3 quotes together for somebody. And if they always go for the highest quote, you don't have to just write that piece of business. I've many times gone back and said, are you sure you think you could handle that? You sure you think you could handle that $180 a month premium? I mean, why don't we start you with the $120 a month? I could always come back in 6 months, if you think that, you want to add more then, but, why don't we start you a little bit less? We can always add more later. And my clients appreciate that. That's a way that I'm looking out for them, seeing to it that they will be able to keep up with their payments, that they're not going to lose the premium. I've always said, you got to be able to pay this every month and not just the first month. So I would rather put them in something that I'm comfortable with them paying each month. And I could always go back and write more later. But most guys, they're just trying to write the most expensive thing out there. And then in month 2 or 3, when it falls off, then they're getting hit with a huge charge back. So, look out for your people, like I said, and show your clients that you care. They will stick with you.
Yeah, I think sometimes that agents that aren't taught this stuff, agencies that don't teach this stuff, are the kind of agencies, like I said in the open, that have no long-term vision, that they're just simply, maybe I didn't say it, but I know I typed it out. They're just simply trying to churn their way through another crop of licensed agents, get what they get, recruit their friends, and go on to the next one. If your upline who makes money off of you, to be explicitly clear, isn't talking about what happens after step 1, what happens after step 2, what happens in 5 years, then they just don't care. Or maybe they don't know, or they haven't been in it long enough to know themselves. So having a vision and a long-term legacy mindset in mind makes the renewals and the persistency and the profit more real.
And just some selling tips to help with persistency. Focus on the need. The initial visit, I'm focusing on how much a funeral costs today. And that's kind of really where it's at. And then I'll talk about whether they want to be buried or whether they want to be cremated. And we kind of focus on those sort of dollar amounts. I know I can always go back and write more later, but I want to focus on the need and I want to focus on affordability. I want to make sure they have enough coverage for what they need it for, but I also need to make sure that they can handle it each month. So again, you want to make sure that they can pay this every month and not just the first month. So keep it affordable for the client. You can always go back and write more business later. And sell on value, not face amounts and rates. There's many different ways to do that. I've talked a lot about like the different funeral concierge services that are available. The American Amicable with the Everest, the Trans-America Express product also now has the Everest. SBLI has the Sequoia, which is pretty similar to the Everest. I mean, there's a whole bunch of them out there. But not only that, I mean, a lot of these different carriers, they even have like different pre-arrangement guides that you can get from them. I order one of my supplies with American Amicable. They send them to me all the time, and I hand them out in every house that I write a sale. I'm giving them the pre-arrangement guide, and I'm putting my name and my phone number in, and I'm letting them know. I tell them, look, you fill the rest of this out, give it to your loved ones, and you tell them that when the time comes, the first person they need to call is me. Have them call me even before the funeral home. I don't want the funeral home telling them something that's not true about your policy. And I want to make sure that the money goes as far as it can. If your family calls the funeral home first, well, the funeral home's going to ask about the policy. They're going to tell them to bring it in. And honestly, they just want to see how much money they're working with. So, yeah. But even just these little things of me, I guess, helping and letting them know I'm going to be there for their family when that time comes is a way of also selling value outside of just these different funeral concierge services and things like that are available. But
you know what's wild, Adam?
Yeah, sure. What's up?
The fact that we talked about 7 different downstream sales that are going to be made by writing one quality piece of business, that when you service the business at the end of the story, at the death claim, there's additional business that comes from that. Like that isn't a marketable strategy. And I don't mean it in an immoral sense, but there's been plenty of pieces of business that I wrote because I answered a death claim call. I walked them through the process. I at least gave them good, solid advice as to what to do. And then they're like, well, I need insurance for me, my friend, my uncle, my brother, whatever, because someone's helping them. And in that life moment, maybe that's really number 7, the life event moment. Now they know they need insurance.
Well, again, too, Chris, if you're doing the right thing and you're running business the way that you're supposed to, you don't have to worry a lot about claims getting denied. You don't have to worry about going back to that family and them wanting to hit you in the face or something. I mean, you're going to do the right thing and they're going to be grateful that you were able to help them and get that money to help them in their time of need. So, with that is going to lead to referrals and more business. So, I tell my clients all the time, I mean, that's part of my presentation. Make sure your family calls me when that time comes. And sometimes they do, sometimes they don't. Either way, you can go back and see that family. You will be notified one way or another of a death claim. Look up the information, figure out who the beneficiary is, go back and visit with them, express your condolences and make sure that everything was done that needed to be done to get that claim paid. That's what it's, that's what it's for. This is for those that are left behind. It's not for the person that is taking out the policy. It's for their loved ones.
Yeah. There's service work that needs to be done at a death claim. If it was a husband and a wife or a brother and a sister or situations like that, you got more work that you need to do by showing up.
Most definitely. So don't just focus on face amounts and rates. Like that's again, persistency issues. If all you're selling is the absolute cheapest thing out there, what happens when the next cheap product comes out and the next agent goes in there and writes it? If you're selling that value yourself, the planning guides, the concierge services that are available, the chances of replacement, like I said earlier, I tell my clients, my clients don't cancel these policies. There's nothing else like it out there. And that alone, I think, helps with persistency. You let them know, like, why would I cancel this? No one else is canceling it. This is something different. This is unique. I tell them this is like the Rolls Royce of final expense plans.
Hey, it's power in how we phrase things. And there's power in value, and there's power in knowing that value is what keeps business on the books, not the cheapest rates. There's going to be 2 new products that come out in the next 60 days. Bet you some of them are going to have pretty cheap rates. It's the value in what you sold that keeps those clients from talking to other agents.
Yeah. And then set draft dates properly. I mean, it's so easy. And so many agents, they do whatever the client tells them to do. And they ask them, this is on a bank draft, what's a good date? And the person tells them the 5th of the month, and they just set it for the 5th. Don't do that.
No.
Ask more questions. Are you on Social Security? When do you receive your deposit? Oh, you get paid on the 3rd. Okay, well, we have to set this for the 3rd. You get paid on the 1st. We have to set this for the 1st. If they tell you that they get paid in the middle of the month, oh, like when exactly? I don't know, like right around the middle of the month. Like, do you get paid on the 2nd Wednesday? Yeah. I think that's when I get paid. Well, then you set it for the 2nd Wednesday. And you can even download, you can Google it, Social Security payday chart. You can look and you can see just based off of their birthday, when they're going to receive their Social Security. So make sure to set the draft dates to coincide with when they receive their Social Security, and you'll have very good persistency. Don't give the client an option. Yeah, exactly.
It's not an option. Like I remember diving deep into an agent that was building up debt a few years ago because she was working with one place. She was working with us. I was trying to get her over here. It was a bad idea from the very beginning. And I kept seeing these American Amicable NSF reports because American Amicable sends us a clear explanation of what's going on with your business. Thank you. And you don't log into the site and you can see the business. Thank you. But I get an email and I'm like, that's strange. I keep seeing her name in lapses. Let's look it up. Guess what the draft date was half the time? The 5th, the 6th, the 7th, the 2nd. And I'm like, what are you doing? Yeah. Well, and it was just some childish excuse about why. Well, they also had a job or no. The draft date is the date they received their Social Security. Grow a set and tell the client that, and they'll respect that. They trusted you to get this far in the process. Do you think they're going to buck the process and kick you out of the house because you controlled this part, the very end of the process? Like, I don't walk into the airport and say, TSA, I am not going through that machine. I don't believe in this machine. No, you go through the process because they're in charge of the place that you're in. You're in charge of this process.
Most definitely. Yeah, I can't stand when people are not on Social Security. Like, I can't stand when I have an appointment with someone that's still working, where they get paid every 2 weeks. Like, it's scary business to write. You would think it would be the opposite. Like, a lot of people will tell you, "Oh no, you want to deal with people that have a full-time job." No, I mean they're living paycheck to paycheck. They're just barely getting by, and but when people are on Social Security, well, they get that deposit once a month on a specific date. And if you're setting it to coincide with that, you're taking the money for this before they can even touch it. So that's the safest business out there, in my opinion, is people that are on some form of Social Security that have a specific draft date or day, which is pretty much anybody who's on Social Security. So, and again, and don't give your client a reminder that they can always cancel. I mean, why would someone do that? Again, I think it's like when you talked about earlier, Chris, the one that I couldn't get anywhere with, and you're like, oh, so you didn't push that much further. You didn't push any harder to try to write it. This is a way a lot of agents will do that. They'll remind the person, well, let's just get you started. If you decide you don't want it, once you get
let's
the policy,
just see if you qualify.
Yeah, we'll just see if you can qualify. You can always cancel it. Like, yeah, no, why would you want to do that?
You can make adjustments later. You can always call me back and let me know. Like,
if you're doing this, basically what you're doing is you're just applying for a loan that you have to pay back.
Mm-hmm.
And that's what you don't want. You don't want to look at an advance commission as a loan. I mean, that's what it is. It is being paid back, but you want the client to be paying it back through their monthly payments and not you from a chargeback.
Correct.
So, but that's what's going to happen if you're using the 30-day look back close. You can always cancel it if you decide you don't want it. That's what they're going to remember when they get their policy. Oh yeah, that guy told me if I don't want this, I can cancel it. Well, I better give them a call before they take the money out.
Yeah. And so many of these people are non-committal anyway. Like, that's one of their human traits, is not to make commitments and decisions. And if you're encouraging psychologically the fact that they don't have to make a decision or make a commitment, what are they going to do? They're going to keep being themselves. But life insurance is a lifetime commitment. Like, imagine if I, walked down the aisle at my wedding and I said, I do, but you can think about it the next 30 days. Like, Adam, how would that have looked? You were there.
That would have been weird. If you would have used the 30-day close on your wife at your wedding, that would have been, yeah. If you decide within the next 30 days you change your mind, well, okay.
You can I mean, it doesn't work. But people don't even think of it outside of that sale. They need to, if they think about it in other ways and realize how dumb and ridiculous it sounds, they would stop doing it, Oh
yeah, for sure. But again, I think that a lot of times it's the whole desperation mode, just doing whatever you can to make a sale. You just got to work harder. I mean, there's ways. I mean, you move on to the next. You find another person to go see. Like I said, you don't want to take out a loan that you have to pay back through from chargeback, getting hit with a chargeback. It's no fun.
No.
Again, don't be afraid to walk away from bad business. That would be, to me, that would be an example of bad business. I think also, I walked away from one a few months back where it was like 5 or 6 people in the house, and the daughter hands me like this prepaid debit card that she has to manually load each month. And I was like, and unfortunately her dad that was there had to leave for work. So I said, all right, well, if you don't have enough time to finish it right now, I'll just come back tomorrow. And I just didn't go back because I didn't want to deal with that. I knew that was just a chargeback waiting to happen. And if you would talk about persistency issues, what do you think happens when you write 6 applications in one home and they all fall off? You're getting knocked with 6 cancellations with that carrier. That definitely doesn't look good towards your metrics.
No,
things to think about.
You can just say to them, I apologize, Adam, we don't accept that method of payment. And You know what happens once in a while? Surprise, they actually had a bank account. Like, this is what they used
Yeah.
because they know they're not responsible. So they use this to pay some of their bills. But before you know it, they actually did want the insurance, but they were afraid to use their bank account. But all of a sudden, oh, that's okay. I have Wells Fargo. Can we use that instead?
Oh yeah. Well, you know,
Oh,
if I walked in and we were like, you know, sitting at the dining room table and everything was nice and clean, and maybe it would have been a little bit different, but
yeah, it
it
wasn't
definitely
there.
that was definitely not the situation that I walked into.
No.
Um, yeah, they had to put their dog away that was going to rip my face off, I think, before I even got in the house. So, just a little quick commercial here for those of you that don't know. You need to be getting on our podcast. A lot of pretty much all the content that we put out there is available through audio and video on Spotify, on YouTube, on Apple, a lot of different platforms out there. So check it out. We actually, I think I just loaded like our 139th or 140th episode, Chris.
Mm.
Over the last, it's been just a little over a year. So, I mean, I'd say that's pretty good. You know, at least the audio, you know, we've been putting out there for about a year now. A lot of good content out there, a lot of stuff that's going to help agents. And all you got to do is get on there. And when you're out working during the day, when you're out running leads, it gives you something to listen to that's going to kind of keep you in the right mindset, keep you motivated, and help you. Tips from people that, I mean, between the two of us, what, over 30 years of experience in the business. So, and not just experience, but success in the business. People that know how to do it the right way.
I thought we didn't help anybody. I thought I didn't offer any help.
I would say we help a lot of people, even people that are, again, people that aren't even with us. Anybody can listen to this podcast. You don't got to be part of our agency. I mean,
Mm-hmm.
everybody can listen to this stuff. This is just stuff that's out there for anybody. It could help millions of people if people really wanted to, you know, hop on it. So
Yeah, our daily trainings on Fridays are probably some of our best training over the course of the week. Mondays, my favorite call to write. Fridays, some of the best content you pour into. Fridays are available for the whole world to see. So nobody has the right to say that nobody helped them.
yeah, most definitely not. So then after the sale, I recommend, and again, we're just talking about keeping up with your business. And like you said, you need to be keeping records of your clients. So save copies of all your applications, whether that's through like Google Drive or iCloud or Dropbox. I recommend the cloud storage because it makes it a heck of a lot easier to locate that information when you need it. Like I have a clients folder that is saved on my iCloud. And that way, if I have a client that calls me, or even when I'm visiting with these existing policyholders, all I have to do is search for their name and I'm going to find their applications that they've done with me and I can look them up. It makes it easier even to write the business in the home. I don't have to re-ask them for their social security number or their birthday. I already have all that information. If anything, I can verify the beneficiaries and see if those are still the people that they want on their additional coverage. But yeah, definitely, you know, save copies of the applications. And again, save it in the cloud storage. I recommend create the file name as I do their last name, comma, their first name. And then I might put like the name of the carrier after their name, but I usually have separate folders for each carrier as well to kind of keep that organized. But yeah, definitely be keeping record of all that stuff. It makes it a heck of a lot easier to go back to. Also, I would recommend to create a spreadsheet with pretty much all the important parts that are on the application: their name, their address, their phone number, their birthday, their beneficiaries, the face amount, the amount of coverage, amount of coverage, face amount, the monthly premium, just all that stuff. And again, makes it a heck of a lot easier when you're going back uh, to verify the information and to write additional coverage. You'd kind of look stupid if you went in the house and you'd have to call into the company to find out exactly what they have. You should know, you're their agent. Uh, and then you can create like a lead spreadsheet out of that. And you can do annual reviews as I've been doing the last few weeks. And This is like what I put together. I'm sure there's a way you can probably go on Google or YouTube and figure out how to do this, but I just do like a mail merge document. Like there's probably maybe even easier ways to do it. I don't know. I just do it. That's how I've been doing it forever through like Microsoft Word, where I'll create a mail merge document and I'll create all the different fields. And then you can like link the spreadsheet to this and it will create all the different lead pieces for you. Again, there's probably easier ways to do it these days with, uh, you know, even the different CRMs. Maybe there's just different ways for it to spit out like this. But again, like I said, I save this in my good notes or like my notability. And same thing, I can search in there for the name and all that information is just going to pop up. So when I go to the door, I already have all that information right then and there. I might just have a few minutes to kill.
Oops.
And
Sorry.
oh no, you're okay. I might just have a few minutes to kill in between an appointment. Maybe I don't have a lot of time to do a whole presentation with somebody, but I could at least search for even like the zip code and find, okay, well, Wendy Johnson, she's in the area that I'm working right now. She took out that policy a few years back. Maybe I'll just go see if she's home and I'll go talk to her real quick. And you just never know what you're going to run into. You may be able to write additional coverage on Wendy. You might be able to get some referrals. You might even be able to talk about Medicare.
I can't tell you how many times I walked up to the door and they said, I was just thinking about getting extra insurance. I thought to myself, I was just thinking of selling you additional insurance. What's the chance of that?
And so this is the script that I use at the door. I mean, pretty basic. Yeah. Hey, Mrs. Jones, remember me? Adam, with Unity Life Group. I was over about a year ago, helped you with your final expense plan with American Amicable. I was in the area, just wanted to stop by to do a quick policy review, just to make sure everything is still set up the way that you'd like. Do you have 5 minutes to go over it real quick? That's it. They're going to let you in. They let you in before. If they don't have time, maybe they'll set up another time, but usually they're going to let you in. Thanks so much for being a good client. I'm just so glad I was able to help you with this. This is important. At least your family will be taken care of when that time comes. I have down here that you have Michael down as your beneficiary. And if something happens to you and Michael at the same time, you got Mary down and she'll be taking care of it. Is that still how you want it set up? Either yes or no. Most of the time it's going to be a yes. If it's a no, well, then you can get like a change of beneficiary form to fill out. And then from there, I always say, I see you have $15,000 in coverage and you're paying $75 a month. And then that comes out on the 21st of each month or on the third Wednesday. Now you're 65 years old right now, Mrs. Jones. Now you'll probably live to be at least 85 or 90, don't you think? And they always say, oh yeah, I'm going to live forever. I'll live to be at least 85 years old. And I'm just reeling it in because I'm just setting them up for what's to come. I pull out what I put together here. And if you guys want a copy of this, let me know and I can email one to you. I pull out the funeral cost inflation chart that I put together. And on the chart here, basically I broke it down. I broke down inflation rates starting in 2021 and just kind of going on from there. And I based it off of the average inflation over the prior 50 years, which was 4.02%. So I based that on the left, and then I put 6% inflation next to it because we just don't know where inflation is going to be. When I originally put the chart together, I did 8% inflation because that's actually where the inflation was at the time. It was like disgusting to see if we remained at 8% inflation, what funeral prices would cost even in like 10 years. So I didn't want to scare people either. So
holy crap.
So I dropped it to 6%.
Funeral.
Yeah, I dropped down to 6%. And I just basically explained this. This chart shows what the current cost of the funeral is. And it shows how they're projected to go up over time. I know you have the 15,000 in coverage right now, but like you said, you're 65 now, you're going to live to be at least 85 or 90 years old. And then I'll point at the year. Well, let's see, in 20 years, in 2045, when you're 85 years old, a funeral is going to cost at least $27,800. So it's great that you got the 15,000. That's enough for right now. What happens when you live another 20 years like you just told me you're going to?
Mm-hmm.
I mean, it sells itself. Then they start to think about it. Yeah, you're right. I do need to add to it. And I mean, that's how I do it all the time on these policy reviews, and it sells itself. So just a little tip there, like I said. But again, it's just a matter of staying in front of your clients, and that's what's going to lead to more business and good quality business. I mean, these policies I wrote yesterday, this husband and wife, like that's 83 and 82 years old, that's had policy with me for 7 years. Like, this is good business. I know that any business I write, their business is not going to affect my persistency unless they die soon. That's it.
Which they might.
I mean, yeah, it's possible. But they're going to keep up with their payments. They're going to keep up with their payments. Policyholders, that's the best business that you can write because they've kept up with their business already. You can feel pretty good knowing that future business isn't going to fall off either. For those of you that are on today watching, if you're not part of what we're doing, check us out. Go to unitylifegroup.com. That's the name of my agency. We help people with in-home sales, also telesales. We have several different ways to help agents when it comes to leads and generating leads and just having a steady flow of people to see on a regular basis. Weekly training, as well as ongoing support. Great opportunities to build a team, multiple carriers, and you're not tied in with one carrier. We do work with several. You don't need a ton, just enough to do what you need to do. I mean, I could probably count on one hand the number of carriers that I've written business with this year. You don't need a ton, but we have them for those that need them. If you're with an IMO that won't release you and you need other contracts, well, we can help you. And from there, as time goes on, we can maybe move those other contracts over as well.
Yeah.
We have high level contracts too. Like I said, high level is not the most important thing. Look at the renewal structure on those comps as well.
Mm-hmm. Well said.
Yeah,
appreciate you guys today. Like, comment, subscribe, engage with the content, share it out with other people. There's probably $100,000 of beneficial information that was just shared for free. So share it with somebody else that could make money by watching what we just shared with you today.
And this concludes another episode of the Insurance, Life, and Everything in Between podcast. If you like what you heard, don't forget to subscribe, share with a friend or colleague. And if you have any comments or suggestions for future episodes, please leave those too. Any input is greatly appreciated. Thank you.